and I'm from HiCom Accounting. So the purpose of the live stream today is about how to help people to pay their mortgage early, and because this is a topic that a lot of my clients have been asking me to share with other people, and also to share with them as well about how to pay your mortgage early, and how to what are the tips for you to save on your mortgage payment but still don't affect your lifestyle much. And I guess that anyone who is investor, property investor or house owner, curious about this as well. So I would like to share a few tips with people about how to pay your mortgage early, and also how to sorry, I got two dogs here and they're fighting on the background. Anyway, so for example, in terms of this live stream today, I'm gonna talk about a case of a mortgage of $500,000 in the terms of 30 years. So the tools that I normally use, don't know if you guys can see this. I guess I'm gonna increase it a little bit. Yep. Alright. For example, if you're planning to buy a house, you should use one of the tools from bank, any bank. That should be fine. Like I normally use ANZ, like this one. I normally use ANZ for this. Say if I probably need to do a bit better. So, if you buy a house for 600k, if you buy a house for 600k, then you need to deposit about 20% of it, which is 120k. And then stamp duty right now in Victoria, if you buy a house as a first home owner for any properties that less than 600k or up to 600k, you don't have to pay stamp duty. But if it's an investment properties, then if they are investment properties, then you have to pay stamp duty. So this is the amount that you have to deposit plus stamp duty plus other fee for solicitor or conveyancer. I always recommend using conveyancer because conveyancer are cheaper than solicitor. And for the matter of land transfer, you don't even have to use a lawyer or solicitor. Their fee are really expensive. The thing that conveyancer can do it as well. So plus stamp duty and everything. For example, if your mortgage is about 500k, then you use any bank like ANZ or Commonwealth to calculate or to budget yourself of how much you're gonna pay. For example, like I use ANZ, 500k principal and interest. I always recommend people to pay principal and interest at the same time. Don't just paying interest only, because 30 years afterwards you still ending up with a loan of 500k without being paid off. Whereas if you make regular payment of principal and interest after 30 years, the house is going to be yours, or the investment property are going to be yours, and then you can use the rental income for retirement income. I got dogs in the background. So, for example, if it is 500k, and that's a residential investment property for the term of 2 years, and at the moment you're gonna pay $2,180 monthly pay. So how are you gonna pay off your mortgage early and still not affecting your life much? The most tool that everybody use is the Aussie home loan. Like I'm just gonna zoom it a little bit bigger. So you can just type like mortgage repayment calculator, and then it's gonna show up like actually I already bookmarked it. Mortgage HR repayments calculator. So the name of the website is mortgage HR repayment calculator. For you to do the calculation, if you make the HR payment, then what's gonna happen? Say if for this house of 500k deposit into the bank, 500k, 30 years, and the interest rate right now with ANZ is 329, and then you pay monthly, then it's give you the same calculation as ANZ, 2,188 per month, 2,187 here. If you start making HR payment only $20 per week, only $20 per week, and then you start making HR payment at the year 1, then it is gonna save you 4,593, and it's gonna save you 5 months in the mortgage. So before, instead of paying 30 years, now you pay 29 years and 7 months. So for example, I already wrote here for the, for example, like for the mortgage of 500k, and then you pay monthly with the interest at the moment for investment property, interest of 329 monthly. You're gonna make a payment of 2,188, 2188. If you make extra $20 per week. So if you don't make any extra payment, the loan of the term is 30 years, and the total loan that you will pay, is $787,000, 328. If now you make extra payment of $20 more per week, then the year that you start making extra payment is the first year. Like after paying the loan for 1 year, the year second you start making extra payment, then you're gonna save $4,593 in interest. And the term of the loan before was 30 years. Now the term of the loan is only 29 years and 7 months. So before that, now 29 years and only 7 months. So you save 5 months in your mortgage, and the total amount that you pay now is only 382 or 335. So you save 4,593 in your mortgage if you make extra payment $20 per week. So per week, if like on average, if people make extra payment of $20 on your mortgage, it doesn't change much of your lifestyle, because $20 is just how much, like 5 cups of coffee, or it's just 2 meals of pho, or 2 lunch. That's it. So this is over the term of 30 years. If you make extra payment of $20 per week over the loan of 500k, you're gonna save $4,593. For example, if you make extra payment of $40 per week, see how much it's gonna save you. So if you make extra payment of $40 per week over the course of 30 years, it's gonna save you $9,025 in interest, and it's gonna save you 10 months of your loan term. Instead of paying 30 years, now you only pay 29 years and 2 months. That's when you already pay off your mortgage. Say this one, so the total loan before, now the total loan is only this much, from 387. Now over 30 years you only pay 778, so you save nearly 10,000 if you make extra of $40 per week on your mortgage. So the first tip is that with the same loan, with the same amount of borrowing, you can start making extra payment into your mortgage, either $20 per week or $40 per week or even $10 per week. It's already helped you to save thousands of dollars and months of your mortgage. Otherwise, for $20, I see that myself, I just throw money into like either drinks or going out with friends or going for a cup of coffee, catching up with friends, whereas you could save $10,000 of your mortgage if you're making extra payment per week. So that's the first tip, making extra payment per week. The second tip is, if you want to pay your mortgage early, instead of paying your mortgage monthly, you pay your mortgage weekly. So paying mortgage weekly save you. Why does it save you, and why does it help you to reduce the total amount of loan at the end of the day that you're gonna pay? Because the interest on the loan that you're paying is on daily basis. They're charging your interest on daily basis. So if you pay your payment, the frequency of your payment is weekly instead of monthly. That's already help you to save your mortgage. For example, for this loan, if you pay yearly on the interest rate of 3.29, every month you have to pay 2,188. Instead of paying for monthly, you pay for weekly. Let's see how does this gonna help you. So if we pay this one, the same loan, 500k, the same loan, 500k, the same amount of interest, they're calculating for you. Per year is 2,188, and per week is 505. 505. If you make your payment frequency as payment as weekly, and also extra payment of $20 per week, so you change the frequency as weekly and extra payment now is $20 per week. So the same amount of loan is gonna save you $18,000 in interest. That's the difference of between paying monthly and paying weekly, because and then it saves you 1 year and 10 months in your mortgage life, because the interest that you're paying for the bank is calculated on daily basis. If you make more frequent payment, the amount of interest that you're gonna pay for the bank is gonna be less than the amount of interest that you pay if the frequency of your payment is more further apart. So the same thing, paying extra $20 per week, but instead of paying monthly, now you pay weekly, then you save your mortgage 1 year and 10 months, where before you only saved your mortgage, you only like shortened your mortgage about 5 months. Now it's only 28 years and 2 months, and you save $18,000. So the total amount of the loan right now, by the time you pay it off, is only this much, and you save $19,300 for your mortgage. That's why all of my houses I pay on weekly basis, and it is in line with the frequency of your clients when they pay for your rent. The tenants either paying you weekly or fortnightly, so you can set up your loan as having one offset account, and that offset account can just make payment into your loan on weekly basis. So the second case is, what if you make the weekly payment as usual, but then you make extra $40 per week? To other people who didn't watch before, if you make payment on monthly but making extra $40 per week, you're gonna save over 30 years $9,025. So now the same thing, if you make payment on weekly basis and making extra $40 per week, if you make extra $40 per week, then over the course of 30 years, you're gonna save your mortgage 3 years and 4 months. You shorten your mortgage 3 years and 4 months, and then you save yourself $35,000 in interest. That's how amazing it is. Now, after 30 years, if you pay your mortgage weekly and you make extra payment of $40 per week, the total of the amount of the loan that you pay at the year end, at the end of the day, going to be $750,000 compared to the original one. So you save yourself $35,000 over the course of 30 years, which means that basically you save yourself about $1,000 per year. If you make yourself paying extra $40 per week and also paying your payment on weekly basis. So, alright, to sum up, the same loan, $500K, the interest right now, 3.29%. If you pay monthly, the same as the calculation of the bank, you pay $2,188. Then over 30 years, the total amount that you pay is gonna be $787,000. But if you still pay monthly and you make extra payment of $20 per week, then you shorten your loan about 5 months. Now, altogether, you only pay 29 years and 7 months, and you save yourself $4,500. But if you keep making extra payment of $20 per week, but instead of paying monthly, you pay weekly, you make the frequency of the payment weekly, you're gonna save $19,300 over the course of 3 years. And then instead of paying 30 years, now you only pay in 28 years and 2 months. So it's still the same amount of money that you're gonna pay every month anyway. Make it as a weekly payment instead of monthly payment, because the interest of the bank, they're gonna accrue on daily basis. So don't pay by monthly, because from the 1st of this month to the 1st of next month, whatever outstanding amount on your loan, they already accrue basics on every single day. And now they accrue interest on every single day. So now if you make payment instead of monthly, you pay them weekly. Then you save yourself paying weekly and paying extra $20 per week. Over the course of 30 years, you save $19,000. The same thing, paying weekly but paying extra $40 per week. Over the course of 30 years, you save yourself $35,000. And now the loan before, you pay for 30 years. Now you only pay for how long was that? 26 years and 8 months. So you saved yourself 3 years and 4 months of your mortgage life. If you just have one house, okay, it doesn't make much difference. But imagine some investment property, some investor out there, they have like a portfolio of 5 houses or 10 houses. If each house save you 3 years, then 10 houses already save you another house. 30 years, right? So each house save you 35,000. 10 house is 350K, enough for you to buy another house if you are a professional property investor. Another tip apart from making extra payment, because say if you got 5 houses or 10 houses, you cannot like keep making extra payment on every single properties that you have, because the money in your pocket, if you got the good discipline of saving your money, you can buy another one, and then you can buy another one. But actually, if you keep making extra payment into your properties, the property is gonna increase in equity, and then you can use equity of the property to buy extra properties as well. So another tip, which is really good, is that on the settlement date of your property, because you know when you buy a property, you have to wait for at least a month or 6 weeks for you to settle the property. On the settlement date, you don't work with the seller, but your bank, the bank of the seller, the bank of the buyer, the conveyancer of the seller and the conveyancer of the buyer are gonna work together. So your bank, your conveyancer are gonna work with their bank and their conveyancer. So you inform your mortgage broker that I'm gonna make the first payment. Instead of a month after this, you make the first payment, one HR first payment on the day of your settlement. It's gonna save you years, or even like up to 16K of interest for the loan of 350. So let's see how much does it save for the loan of 500K. So making HR payment on the settlement date. For example, say like this one, monthly, the loan is 500K. Monthly payment is 2,188. If you make an HR payment on the first date, so the loan is not going to be 500K anymore. The loan is going to be about $497, $812. And then over the course of 30 years, you still make every month payment like this much, 2,188, right? So with a loan of 497,812, 497,812 over the course of 30 years, now on monthly basis, the bank asks you to pay 2,178. But if you keep paying monthly as normal, which is 2,188, so we will say monthly, the same amount of interest, no HR payment, because like normally you should have paid 2,188. I'm just doing the calculation for you. If you pay one HR payment, then the loan reduced to this much. So if you want to keep paying 2,188 as normal, then here you have to put another $10 here to do the calculation. So you save yourself 3 months of your loan, and the total of interest that you save is $2,317, which means that compared to like after 30 years, you should have paid 787. Now, if you make one HR payment on the date of settlement over the course of 30 years, you save yourself $5,760. That's how much you save over the course of 30 years if you just make one HR payment on the date of settlement, and then you save your loan 3 months in your mortgage life. So to sum up the tips for today, the first thing is that instead of paying monthly, you change into paying weekly, because the interest is compounding on daily basis. If you pay monthly, the frequency of the payment too far apart, whereas in that 30 days of a month, whatever outstanding amount that you have on your loan, the bank already accrued the interest on that outstanding amount. So you change your frequency payment from monthly to weekly. That's the first thing. The second thing is that you make HR payment like $20 per week. You should be the one who decide how much of HR payment that you should make, either per week or per month. That doesn't change your lifestyle. For example, for me, if I make HR payment of $20 per week, it doesn't change much in my life. So if you pay HR payment $20 per week and you still paying monthly, then you reduce your mortgage life 5 months, and then you save yourself $4,593. But if you make payment weekly, instead of monthly, and making HR $20 per week, then you save yourself $19,300. That's insane. And it reduces your mortgage life up to 1 year and 8 months. If you pay monthly, but you make HR payment per week $40 over the course of 30 years, you save yourself $10,000, $9,225. However, if you make payment weekly and making HR $40 per week, then you save yourself $35,000 over the course of 30 years. So if you're thinking of having 5 houses or 10 houses, buying it under the trust, investing about it as a professional investor, then I recommend you to put the payment weekly, because your tenant is gonna pay for your house fortnightly or weekly, and then all of that payment going to your offset account, and that offset account just gonna take out of your the bank just gonna take out of your offset account either weekly or fortnightly. It's up to you. Even you pay fortnightly, it's still better than paying monthly. And if you have five houses and with the same amount of 500K for the loan, you're gonna save over the course of 30 years 170K. And the loan, instead of being paid in 30 years, this one I forgot to put down, but it was saying it was saving your mortgage about 3 years and 6 months. That's why 3 years and 6 months. If you pay your mortgage on weekly basis and also making extra payment of $40 per week, then for the loan of 500K, you're gonna save $35,000 in interest over the course of 30 years. The last tip is that on the day of the settlement, making one extra payment on the day of the settlement. Then over the course of 30 years, for the loan of 500K, interest 3.29, it's gonna save you $5,700. And if 10 houses you do the same, you're gonna save yourself about 60K. Plus, making extra payment $40 per week and doing on weekly basis, you're gonna save yourself how much? Another house. So to sum up, making weekly payment, making extra payment, putting it as a habit of making extra payment that doesn't affect your lifestyle, and pay the first payment on the settlement date. Okay. What else? Nothing else. I think that's about it. If you're still confused about how to do the calculation of your mortgage, I think that you should sit down with your tax accountant or your mortgage broker. Any tax accountant should understand this and should be able to do the calculation, and the advice should be tailor-made into your situation, like how many houses you have, what are your borrowing capacity, what are your capability of paying extra payment or making extra payment without affecting your life, and also the expected of rental income is also a very important element in investing in properties as well, because from my own point of view, apart from yielding into capital gain, an investment property should be able to making payment for itself in case you lose your job or your business get into trouble that you cannot guarantee to make frequent payment as you used to be. So the investment property should be able to earn enough income to make the payment on either weekly basis or monthly basis that doesn't affect your life. And having one house or two houses, the weekly payment or monthly payment, you don't feel the changes much. But if you decided to become a professional investor and having about 5 or 10 houses, if you want to make extra payment every single week, say $40 every single week for every single house, so 10 houses is going to be about $400, and per month is easily about $1,700. So before you're able to do that, you need to sit down, do a very good calculation, and seek professional advice. And also I'm against the opinion of that you shouldn't go on holiday, you shouldn't take your kid on any weekend getaway, you should stop going out with friends. No, investing into properties doesn't mean that you have to stop all the things that you like or change your lifestyle. So otherwise, if your accountant cannot help you to do that, you can contact me. Thank you so much. Bye.